Hello everyone, welcome back to this exercise solutions series for chapter 8 from our Managerial Accounting course, ACCT 428. In this video, we're going to be looking at the last and final exercise that we have selected for this chapter, exercise 8-11A. So let's read the exercise together and then see how we can work through it. The exercise says Monique's Florals produced a special Mother's Day arrangement that included 8 roses. The standard and actual costs of the roses used in each arrangement is as follows, and here we have the average number of roses per arrangement. The standard is 8 and the actual is 8.25. The price per rose, the standard is 50 cents and the actual was 48 cents. And ultimately the cost of roses per arrangement, the standard is $4 and the actual is $3.96. Monique's Florals planned to make 750 arrangements, but actually made 790 arrangements. So what's required? A, determine the total flexible budget materials variance and indicate whether it is favorable by the letter F or unfavorable using the letter U. So for the first requirement, we want to see what was the total flexible budget materials variance. Okay. And for that, we use the following formula: the absolute value of the difference between the actual cost per unit and the standard cost per unit multiplied by the actual units. Okay, and that would be the absolute value of the actual cost per unit that was given to us in the question right here, $3.96, minus the standard cost per unit that was also given to us in the question right here, $4. Okay, multiplied by the actual units, and the actual units was given to us right here, 790 floral arrangements. Okay, run the numbers. 3.96 minus $4, that's negative 4 cents, but we are using, or we are taking the absolute value, remember, so negative minus 0.04, okay, multiplied by 790. And once we take the number within the absolute value, we turn it into a positive, so 0.04 multiplied by 790, 0.04 multiplied by 790 arrangements, that would give us $31.60. Okay, so that's part A. Is this favorable or unfavorable? The actual cost was lower than the standard cost, so this would be a reduction in cost, so that would be a favorable variance. So we'll just put the letter F, or just write favorable, it's fine. Okay. Part B, it says determine the materials price variance and indicate whether it is favorable by the letter F or unfavorable. So now we want to determine the materials price variance. We're going to use this formula: actual price minus standard price multiplied by actual quantity. So now, in this particular part, we are limiting the analysis and the variance by the difference in the price. Okay, so now we'll substitute in our formula. The actual price was right here, price per rose 48 cents, and the standard price is 50 cents. Okay, so substitute in the formula. Absolute value of 48 cents minus 50 cents multiplied by the amount of roses that the business had to use, which is the actual number of roses right here, 8.25. So 8.25 multiplied by the actual quantity of arrangements, which was 790 arrangements. Okay. Here we're going to have the absolute value of 2 cents, or negative 2 cents, multiplied by 8.25 multiplied by 790. That's 6,517.50. Okay, so that's the total number of roses that the business had to use. Now we'll multiply that by 0.02, and we will get a variance of $130.35. Okay, was this favorable or unfavorable? Again, the actual price, which is this, is lower than the standard price, so this must be a favorable variance. Okay, so we'll just write F. Part C, determine the materials usage variance and indicate whether it is favorable F or unfavorable U. So now we want to see the difference or the variance that was driven by the difference in the number of roses used. Remember, the standard number of roses to be used is 8, but the actual that Monique had to use is 8.25. Okay, so we'll write down our formula and then substitute. So part C, that would be the absolute value of the actual quantity minus the standard quantity. Okay, multiplied by the standard price. Remember, you need to memorize these 3 formulas, and it will make your life a lot easier. Okay, what was the actual quantity? It was 8.25 roses multiplied by the number of arrangements that Monique sold, which is 790 arrangements, minus the standard number of roses, which was 8, again multiplied by 790 arrangements, and then we multiply by the standard price, which was 50 cents. Okay, now let's see. 8.25 multiplied by 790, that's 6,000. Let's put the absolute value so we don't forget that. 6,517.50 cents minus 8 multiplied by 790. That's 6,320. Okay, multiplied by 50 cents. Let's calculate what's in the absolute value. 6517.50 minus 6320. That's 197.50 multiplied by 0.50 cents. Okay. Again, as I always recommend my students, keep it simple, go step by step. Don't skip any steps. Don't try to rush your calculation, because the more you rush your calculation, the more probably you're going to make mistakes, okay? So 197.50 multiplied by 0.50, which is 50 cents. That will be 98.75 cents. Okay. Is this favorable or unfavorable? Again, you need to analyze the situation first. She was supposed to only use 8 roses per arrangement, but she ended up having to use more. So because of that, that cost her a bit more money. So this variance here is unfavorable. So we're going to denote it by the letter U. All right. So that's part C. And then part D, it says, confirm the accuracy of requirements A, B, and C by showing that the sum of the price and usage variances equals the total variance. Okay. So what we're going to do here is just kind of summarize what we have found in the previous steps. The price variance okay, which was, where is it? Here, $130.35 favorable. So I'll just copy that. 130.35 favorable. Okay. And then the usage variance, which was what we have done in part C, right here, $98.75, unfavorable. Okay, so once we combine these two together, we should get our total variance. And it should match what we have found in part A, the first step. So let me run the numbers. 130.35 minus 98.75. Why am I subtracting? Because one of these variances, which is the price variance, is favorable, whereas the other variance, which was caused by consuming more roses than the standard, was unfavorable. Okay, so one change or one variance was positive, had a positive impact on the business. The other one was negative, it had a negative impact on the business. So because of that, I'm subtracting $98.75, which was caused by consuming or needing to use more roses, from the price variance, which was caused because the business had to charge less price than the standard price. okay, which was a cost to the business. So the cost of the rows was in reality only 48 cents instead of 50 cents. Okay, so that is a favorable change, right? So because of that, we are subtracting. So 130 and 35 cents minus $98.75, and that would be $31.60. Okay, now this should be our check number. So let's go back to our first step and see if the outcome we had in part D matches the outcome we had in part A, $31.60, which is the same. And of course, this is a favorable variance, which is the total variance. And why is it favorable? In our check here, because the favorable variance is more than the unfavorable variance. So the favorable price variance is higher than the unfavorable usage variance. Because of that, the total variance is favorable. And this is the exact result we found in the first step, right? $31.60 favorable. So that is part D also completed. This is how you answer a similar exercise. I hope you found this video useful of exercise 8-11A. If you have any questions, please feel free to drop them down in the comments. This is the last exercise for chapter 8. I hope you enjoyed this series and found it helpful to you. If you have any questions, ask away. And until I see you in the next chapter's exercise series, take care.